Folks, promoting a distressed sale. Let's talk about that and then get into the latest home prices and insights for the Peel and Durham region for week ending November 15, 2023. Since the beginning of time, there have always been sellers selling because they have to, because they have financial hardships. It's always been there. Now, there are times in history where there's been way more than other times, even though when markets are going up and prices are strong and lots of people are buying and everybody's qualifying for mortgages, there's still sellers for one reason or another that have financial problems and need to sell. Back then, in a different time other than today, when a seller would call a listing agent and say, I need to sell right away, I'm going to lose my house, I have financial problems, I need to sell. That was something that was kind of kept out of the limelight. It was something that you just didn't, as a listing agent, didn't talk to anybody about. However, you did your job. You marketed the home properly, you priced it properly, and it sold. And the whole idea was that nobody could know the seller's financial position. Nobody on the buying side should know, because that would just give ammunition to the other side to take advantage, or try to at least take advantage of the seller. Today, I don't know what's changed or why it's changed, but we are seeing sellers with financial problems right in the listing advertising it. We are having conversations. If I'm working with a buyer and I call a listing agent, there's agents out there telling you, yes, my seller's in financial problems. Sometimes it's written right in the listing agreement. So I've read on an assignment sale, seller willing to walk away from $200,000 deposit, must sell, must be sold by such and such a date. There's lots of clues and sometimes in plain English sentences telling you seller has financial problems, the property must be sold. I've come across some of these where I've tried to buy. One recently we tried to buy that promoted the seller was in trouble. And when you call the listing agent, says, yes, the seller absolutely needs to sell. And the home was suitable for my buyer. It was priced with an offer date, and the list price was a little bit lower than comparable properties in the area. We put in an offer night. There was 3 offers, and the seller took none of the offers. Now, we put in an offer, I would say reasonable under the circumstances. It was refused along with the other 2 offers, and then the property got relisted at higher than the comparable properties. So you kind of got to wonder how stressed or how distressed was the seller that now they're pricing at a price much higher than the comparable properties. So my thoughts are this on if you're choosing to advertise a distressed property. First of all, understand who you're attracting. And I'll use an example of a garage sale. If you put a sign in front of your house, garage sale, you could have something there that you're selling that you paid $200 for. It's still in a box, brand new, never touched. And you might price it at $50 at the garage sale. And anyone who sees this $50 item that is $200 in the store, they're still going to turn around and say, I'll give you 10 bucks for it. That's who you're attracting at a garage sale, and that's the kind of buyer you're attracting when you promote and advertise to the world, hey, I'm in trouble as a seller, please come and take advantage of me. That's what you're doing. There are better ways to get the sale you want, even though you've got pressure. Real estate agents, realtors should do their job and market the home properly, promote it properly, price it properly, but they need the sellers obviously okay with this to price it in a way that it'll sell quickly so the seller can be relieved of their financial stress or can get the result that they want. But promoting and advertising, hey, I'm in trouble, you're just asking for the garage sale buyer to come in and try to take your house for free practically. If you feel this video can help somebody you know, please pass it along. If you get value from what we're talking about, subscribe. If you want to speak with me about your real estate situation, selling, buying, it's really simple. Below this video in the description, there's a link to my calendar. Click on that, book a time that's convenient for you, and we'll talk about whatever's on your mind. Now, let's get into the numbers. Distress sales, they're piling up. Maybe that's why listing agents are promoting these more and more. But there is a right way and a wrong way, I feel, to promote a property that's in a distress situation without giving all the leverage, all the power to the buying side. Let's get into the numbers. Here's a quick summary. This is for detached properties only, broken down by week. I have 3 months on the board here. Durham, Brampton, Mississauga. Between Durham and Brampton, there's a $100,000 price difference in average sold prices. Again, this is for detached properties only. Between Durham and Mississauga, there's over $200,000 price difference. You could see the attraction for people that go to Durham. There's so much difference in price. Now, I should say for my Durham sample, I'm using Ajax, Pickering, and Whitby as my Durham sample. We're going to start off with Mississauga. Detached properties only, broken down by week for a whole year. For week ending November 15th, 30 detached properties were sold. We're seeing the decline. It's normal, it's seasonal. Yes, the interest rates and the buyer pool that's out there has something to do with it also. But if nothing else changed and it was only seasonal, we'd be seeing a decline anyways, headed towards the end of the year. So 30 detached properties were sold. 2 of those were at $2 million or more. Average sold price went up from the previous week, now sitting at $1,348,000. It did go up from the previous week, but overall, post Labor Day, that's what this line represents, average prices have been trending down. 1,348 is lower than the lowest month we had last year, which was October. It was 1,391, almost 1.4. That was our low point for last year. We're at 1,348. Compared to last year, 1,348 is 2% lower than where we were for the same week a year ago. The median price is also 2% lower. And when you look at the 4-week moving average, that's the dotted line. Because of the ups and downs, it's kind of sort of trending down. It's really hard to see, but if you look at where we are now, a little over 1.3, where we were 3 months ago, more than 1.4, you can see that there is overall, over time, a big difference in average sold prices. 30 were sold, 23% of those sold at list price or more. Sales, when we compare year-to-date sales, January 1st to November 15th, this year versus last year, 2022, we have 11% fewer sales this year. However, the real story, when we compare to the year before versus 2021, this year we have 45% fewer sales this year versus 2021. Huge difference in volume. Listings, trending down. That's normal, that's seasonal. Active listings also starting to trend down. Compared to last year, we have 9% fewer listings. That's year to date, January 1st to November 15th. Compared to 2021, we have 14% fewer listings. So yes, listings are down, but nothing compared to how much sales are down. Months of inventory sitting at 4.2. It is lower this week from the previous week, but overall, trending up. And as months of inventory trends up, prices tend to trend down. Let's look at Brampton. 31 detached properties were sold. 3 of those were at $2 million or more. Now, overall, since the beginning of the year, prices have been trending down. If we look at post-Labor Day, they went up and then they started to trend down. But for the last 3 weeks or so, prices have been going up. These are average sold prices. I don't think, and I have experience working with buyers and sellers in Brampton, I can tell you prices are not necessarily going up. This just happens to be the combination of which of these homes are being sold is kind of giving the impression that prices are going up. And you could see it going way up right now over the last few weeks. Compared to last year, $1,224,000 is 13% higher than where the average sold price was a year ago. The median price is 5% higher than where we were a year ago. Sales of the 31 that sold, 23% sold at list price or more. We have compared to last year, 18% fewer sales in Brampton year to date, January 1st to November 15th. Just in 1 year, 18% fewer sales. No need to look at 2021 because that's like half, 50% lower. Listings, yes, they're trending down. That's normal. Active listings slowly starting to come down. Months of inventory higher, sitting at 5.3 months of inventory. When months of inventory is this high, it's unusual that prices kind of trend up. It doesn't really go that way. Here is Ajax, Pickering, and Whitby. 40 detached properties were sold. 2 of those were at $2 million or more. Average sold price up from the previous week to $1,124,000. Overall, trending down. Compared to last year for the same week, 1124 is 5% lower than where we were this time a year ago. The median price is 12% lower. And looking at the dotted line, the 4-week moving average, prices are trending down. 40 were sold, a quarter, 25% sold at list price or more. So 10 out of 40 sold at list price or more. Listings coming down. Active listings coming down. Not by much though. Months of inventory did come down from the previous week. It's now at 2.4. But overall, over time, we can see it trending up. Now, Durham region is still, as far as the GTA goes, one of the most affordable areas. And that, affordable, it's relatively speaking, compared to where prices are everywhere else, Ajax, Pickering, and Whitby have some of the better prices. And because of that, months of inventory is still considered quite low at 2.4, when other areas are sitting much higher in the 4s and the 5s. Here's condos. These are condo apartments for all of Peel region. 22 condos were sold. 1 was at $1 million or more. Average sold price sitting at $640,000. Now sales are quite low. We used to sell 50s and 60s. Now we're in the 20s. And because it's so low, you're going to get these ups and downs, the high peaks and valleys. Overall, it kind of looks like prices are either flat or coming down. It's not much of a difference. It's hard to read. $640,000 is 11% higher than where we were this week a year ago. The median price is also 11% higher. It's hard to tell with the 4-week moving average. I'm sensing that prices are trending down, but not by much. They've already come down quite a bit. Of the 22 that sold, only 14% sold at list price or more. So there's really not much competition when it comes to condos in Peel region. Listings are coming down. They're still quite high though, I would say, for condos in Peel. And months of inventory way up there. excuse me, way up there at 7.4 months of inventory. And that months of inventory has just been climbing. Here we go, a quick summary. Like I said, Ajax, Pickering, and Whitby, 2.4. That's quite low still. There's some competition in that area of the GTA, but then you've got 4.2 in Mississauga, 5.3 in Brampton. Condos, they're basically off the chart here at 7.4 months of inventory. Most cases, you're either going to experience a balanced market here below 5 months, or it's going to pretty much be a buyer's market in a lot of areas that you're either looking to sell in or looking to buy in. It's an interesting market. Align yourself with somebody that could really give you the right information. Have a great day. Thanks for watching.